Welcome to The Deep Dive, the show where we take complex topics, cut through the noise, and really try to extract the most important insights for you. I'm Parker.
And I'm Jamie. We're part of the Headline Channel, and we're all about helping you understand current affairs and, well, other complex stuff in a simple, insightful way.
Yeah, definitely. Today, we're plunging into something that's been making headlines and honestly impacting countless lives across India.
We're talking about this recent wave of layoffs. It's been sweeping through India's startup ecosystem, which, wasn't that long ago, celebrated for its explosive growth.
Exactly. How did a sector known for creating so many jobs suddenly face such huge job cuts? It's quite the turnaround.
It really is. It's a fascinating story, though sometimes unsettling.
Yeah.
It pulls together global economics, big strategic decisions by companies, and, of course, the very real human impact.
Right. So our mission today is basically to unravel this for you. Simplify the picture, give you a clear, informed perspective on what's actually going on. Now, before we dive deeper, just a quick note. This deep dive is purely for informational and entertainment purposes.
Yeah, it should definitely not be considered financial or investment advice.
Good point. Okay, so let's unpack this whole thing. India's startup story. I mean, it's been pretty meteoric, hasn't it?
Absolutely. You think back to, 2015, the Startup India initiative launched.
Right. And the goal was explicit. Build a strong ecosystem for innovation, economic growth, and maybe most importantly, massive employment opportunities.
And, well, it worked. For a while, anyway. India quickly became the world's third largest startup ecosystem.
Third largest, wow.
Yeah, contributing something like 4 or 5% to India's GDP, which is significant. We saw this explosion, from maybe 26,000 startups initially to, get this, over 84,000 by the time the Economic Survey report for 2022-23 came out.
That's incredible growth. And it wasn't just the number of startups, right? It was the value, too.
Exactly, the valuation story. By September 2022, India had 107 unicorns.
Those billion-dollar startups.
Right, a combined valuation over $340 billion. And crucially, the jobs aspect.
Yeah, jobs.
These companies collectively created over 7.5 jobs across the country. That's 750,000 jobs, a really huge number.
A massive number. So what fueled all this? It was the investment, wasn't it?
Oh, absolutely. A huge part of this rapid expansion was just this flood of private investment, seed funding, angel investors, VC, private equity, you name it.
So much money pouring in.
Yeah. In 2021 alone, Indian startups raised a record-breaking $35 to $42 billion.
Wow.
Across more than 1,500 deals. It genuinely felt like, money was cheap, projections were sky high.
The sky was the limit kind of feeling.
Pretty much. But,
Yeah, here's where it gets, as you said, really interesting. Despite this incredible climb, cracks started appearing. Mid-2022 onwards, things shifted.
That's right. The initial COVID shock, surprisingly, didn't hit tech as hard as some feared initially. But then the global financial climate, it just fundamentally changed. Well, central banks, especially the U.S. Federal Reserve, started hiking interest rates pretty aggressively. And that basically changed the whole game for capital flow. Easy money dried up. This led to what everyone started calling the funding winter.
The funding winter, right. And the impact was quick.
Oh, incredibly swift. Funding for Indian startups. It peaked at nearly $15 billion in Q3 2021.
Okay.
Then it just started falling. $10.3 billion in Q1 2022, then $6.84 billion in Q2. And it hit a real low of just $885 million by August 2022.
$885 million, down from almost $15 billion.
Yeah. A staggering drop, over 90% down in less than a year.
Wow. And the direct result was layoffs.
Exactly. Mass layoffs started sweeping through. Data shows over 27,000 employees let go by Indian startups in 2022 alone.
27,000.
And it didn't stop. 2023 saw over 15,000 more job cuts, roughly 10,000 in 2024.
And it's still happening now.
Yep. Just the first 5 months of this year, 2025, over 3,600 startup employees have already lost their jobs.
Goodness. So why? Why this sudden, drastic reversal after such growth? It can't be just one thing, surely.
No, definitely not. Our sources point to, a perfect storm. External pressures, internal issues.
Yeah.
All hitting at once.
Okay, let's break that down. External factors first.
Right. So macroeconomics, you've got the lingering effects of COVID, obviously. Then the Russia-Ukraine conflict, which pushed up operational costs.
Yeah.
Inflation in oil prices, changes in public market valuations affecting private ones. And then there's the Indian rupee depreciating.
How did that hurt?
What made dollar funding and any existing dollar loans more expensive for these Indian companies? Hit their margins, their valuations.
I see. So global headwinds, what about the funding itself, that capital crunch?
That's a primary driver, absolutely.
Right.
A huge chunk, like 46% of layoffs back in 2022, were blamed directly on the capital crunch.
So the money tap turned off and companies had to cut costs fast.
Exactly. Many startups that were all about growth at all costs, burning cash to get bigger, they were suddenly forced to pivot hard towards profitability, leaner operations.
And the numbers show that, right? You mentioned financials.
Yeah, looking at about 112 startups that released their FY24 financials. 67 of them were still losing money. So the pressure for profit is immense.
Okay, so external pressures, lack of funding. What about internal factors, mistakes made by the startups themselves?
Definitely a factor. A big one seems to be unplanned or rush hiring.
Hiring too many people too quickly during the boom?
Precisely. They onboarded talent super aggressively, assuming hypergrowth would just continue forever. Then suddenly, those roles were redundant.
So strategic miscalculations.
Yeah, suggests maybe as some sources put it, a lack of understanding of the business, the market, demand versus supply.
And the VCs? What role do they play?
Huge pressure there, too. Venture capitalists started demanding immediate and sometimes really high returns. We're talking targets of like 200, 250%.
Wow, that's aggressive.
Extremely. And when you need to hit those numbers fast, cutting costs is key. Labor is often the biggest expense line item.
So layoffs become almost inevitable under that kind of pressure.
It seems that way in many cases.
Okay, there's another factor mentioned, especially more recently. AI.
Ah, yes, generative AI. That's definitely emerging as a significant factor, particularly in the 2025 data.
How so?
Startups are adopting AI to streamline things, automate tasks that were previously manual, reduce costs.
And that means fewer humans needed for some roles.
Unfortunately, yes. We're seeing AI adoption cited as a key reason for workforce realignments now. Technology replacing human roles.
Right. And one more thing, market dynamics, like people going offline again.
Yeah, that's played a part too. The post-pandemic return to offline activities slowed down the massive online growth many startups, especially in edtech or e-commerce, relied on during lockdowns.
So a whole confluence of factors. Let's make this more concrete. Can we look at some specific companies or sectors hit hard? EdTech, you mentioned.
Yeah, EdTech is a prime example. Major players like BYJ US, they laid off 2,500 employees back in 2022.
Right, I remember that.
Said it was pushed for profitability after racking up huge losses. And they kept cutting another 7,000 jobs gone by December 2023.
Ouch. And Unacademy?
Similar story. Let go of 12% of their workforce. Their losses doubled in FY22. The whole sector, I think around 10,000 EdTech jobs were cut just in 2022 from over 20 startups.
10,000 in one sector. That really shows the scale. What about others? Food delivery.
Yep, hit hard too. Swiggy fired 380 employees, cited macroeconomic conditions, slower growth in food delivery. Zomato let go of over 250.
And quick commerce. Blinkit.
Blinkit cut 1,600 people in 2022. It spent heavily on expansion and deep discounting, and it backfired when the funding tightened.
Right. And more recently, Zepto.
Yeah, Zepto cafe operations were halted temporarily in several cities just this year, 2025. Affected about 400 employees, part of cost control measures.
Okay. Mobility EVs.
Not immune. Ola laid off 200 engineers in 2022, and Ola Electric had plans to cut over 1,000 jobs in 2025. Reasons cited: managing losses and bringing in AI automation.
AI again.
Yep. And you see it across e-commerce too. Meesho cut over 300 people in 2022 when they shut down their superstore grocery experiment. Frizo, a fruit delivery startup, laid off 150 plus amid a cash crunch.
So many different types of startups affected.
Even used car platforms like Cars24 let go of 250 staff this year, citing overhiring. A health tech startup, Zopplar, shut down completely due to regulatory changes, took the whole 45-person team with it.
Wow, a full shutdown.
And Gupshup, an AI unicorn, laid off 500 between late 2024 and early 2025 just to improve efficiency.
It's relentless. And these aren't just numbers, are they? You mentioned a specific story on cutbacks.
Yeah, his story highlights the human side. An IT professional suddenly finds himself benched, put on this fluidity list.
Which basically means you might be next.
Pretty much. Facing the axe, despite having 100% office attendance. Caught between the company saying it's cost-cutting, but also maybe hinting at performance. It shows the confusion and, frankly, the precariousness for employees.
Yeah, that ambiguity must be incredibly stressful. Which brings us to the human cost. What is the impact on these thousands of employees?
Well, The psychological toll is huge. Our sources consistently point to that. Layoffs just hammer morale, confidence, self-esteem.
I can imagine.
And there's a real stigma attached to being jobless in many circles. It makes explaining those employment gaps in future job interviews really, really difficult.
That's tough. And are there practices making it even harder? You mentioned something about settlements.
Yes, this cooling period practice. Some companies hold back the final settlement severance checks for up to 75 days.
75 days? Why?
Well, it effectively acts as a gag order. Employees are less likely to speak out publicly to the media on LinkedIn about their negative experiences if their final pay and maybe crucial recommendation letters are still pending.
That seems manipulative.
It's certainly a powerful disincentive to speak up. And unlike, say, the UK or US, employee protections in India for startup workers, often classed as non-workmen, aren't always as strong.
How so?
Employers can often terminate with just 30 days' notice or pay in lieu of notice, and many opt for immediate termination with pay, partly to protect IP or data, but it leaves employees feeling suddenly cut adrift, high and dry.
Yeah. This must be creating a lot of distrust, right, between employees and startups.
Absolutely. A huge trust deficit. Employees are becoming much more cautious. They're doing deeper background checks on potential employers.
Trying to figure out if a company is built on solid ground.
Exactly. Are they driven by actual revenue and profit, or just burning through the latest funding round, which could disappear any moment?
So, more cynicism, more caution. How else are employees responding?
We're seeing the rise of what some call silent rebels, disgruntled employees who feel companies and investors are only looking out for themselves. They're increasingly engaging in moonlighting, taking on second jobs, side hustles to build their own financial safety net.
Moonlighting. That's controversial, isn't it?
It is, but it raises questions about fairness, especially when you hear about unicorn founders who themselves take on advisory roles at other companies. Is it only okay for the bosses?
Fair point. So what's the advice then for employees in this climate? Negotiate harder.
That's what sources suggest. Negotiate your contract more aggressively up front. For instance, push for a longer notice period.
Like how long?
Say 3 months, maybe even 6. That could provide a crucial financial buffer if a layoff does happen.
Okay, that makes sense. What about moonlighting itself?
Maybe push for clearer clauses there too. Argue that as long as company data isn't compromised and your main job isn't suffering, maybe employees should have more flexibility to secure their income streams.
So it's really about shifting the power dynamic a bit, demanding more security.
I think so. It feels like a fundamental rebalancing. Employees are saying, look, we need more control, more security. It's forcing companies to maybe rethink those traditional, maybe one-sided employment models.
Okay, let's try and wrap this up. To summarize our deep dive then, India's startup scene had this incredible boom.
Right. Fueled by government support, tons of capital, exponential growth.
But now it's navigating a really challenging phase. Global economic shifts, funding tightening up dramatically.
And these strategic realignments inside companies, including this big push towards AI and automation, fundamentally changing things.
All leading to these widespread layoffs, which really highlights the need for, well, more sustainable business models, right?
Exactly. A more balanced approach to growth.
Yeah.
And maybe a deeper thought about the human capital involved. It's not just about the numbers.
Yeah, the insight isn't just the boom ended. It's more that this funding winter forced a hard look in the mirror.
Right. Are we building businesses meant to last or just chasing the next valuation? And where do employees fit in? Are they just assets to be cut or partners who need maybe new kinds of security?
So, key takeaways. The ecosystem is maturing, but definitely with growing pains.
Big time. Economic forces, new tech like AI, they're fundamentally reshaping the job market here.
And the power balance between employers and employees, it's under intense scrutiny.
Driving these new demands for transparency, security in contracts, more flexibility.
So as the Indian startup world keeps evolving, chasing profitability, using new tech, the big question remains, doesn't it?
Which is?
How will that balance shift between innovation, economic growth, and the security and well-being of the people making it happen? What responsibility does this whole ecosystem have for the individuals it impacts beyond just the profit motive?
That's the crucial question to keep asking.
Definitely something to think about. If you found this deep dive insightful, please do subscribe to the Deep Dive on the Headline channel, wherever you get your podcasts.
Yeah, and leave us a review. We love hearing from you. Let us know if there are other complex topics you'd like us to dive into.
Absolutely. Until next time, keep learning, keep questioning.
And stay well informed.